Between 1972 and 2022, Australian house prices averaged an incredible 8.2% per annum. Now, these types of returns have not just set up an entire generation of Australians, but has also meant that Australian property has been one of the top performing assets in the world during the last 50 years. Now, there's a whole lot of doom and gloom in the media at the moment, and that is completely understandable. Obviously, some people are in pretty big debt. A lot of people are coming off very low interest rates, moving into higher ones. And obviously the uncertainty of the interest rate environment, coupled with the fear that's still coming through the market post-COVID, has meant many people are feeling a bit uncertain at the moment. My personal thoughts as an investor at the moment is that people are taking such a short-term view. And if they look back at the history of Australian real estate or what's expected to come through some of the ABS and infrastructure numbers that we'll talk about later in this video, then people would be feeling much, much more confident at the moment, particularly about the markets like Brisbane and Perth that have yet to fully perform this cycle. Now, if we look at the last 50 years, it hasn't been all roses. Now, when you look at long-term data and go, well, it's averaged 8.2%, what it really looked like was this: a chaotic, crazy period of extreme booms, extreme busts, a lot of fear and a lot of excitement in the market. When you think back about the last 50 years, we've had the GFC, we've had the dot-com boom and bust, we've had 9/11, we've had periods of massive unemployment, we've had the crazy inflation in the 80s where interest rates got as high as 17%, we've had COVID, and even when you look through all of these crazy events, many of them much scarier than the environment that we're in at the moment, we've still averaged that incredible long-term return. Now, when I start geeking out on the data a little bit, Sydney, Melbourne, Hobart, and Darwin have had 42 years out of the last 50 where property prices have gone up, and 8 years in the last 50 years where they've come down. Now, that means that markets have risen an average of 83% of the time. Now, when we look at Canberra and Perth, there's been 10 occasions in the last 50 years where prices have come down. That's occurred 6 times in Brisbane and only 3 times in Adelaide. When looking back at the data year on year across all of those capital cities, I can see there's been periods where investors have made extremely strong returns. There's been many periods where it's sat flat. And obviously, as you can see here, there's been periods where prices have come down. Now, the most common emotion when prices are coming down is fear. That's when all the naysayers come out in the market, and that's where the similar types of personalities come out saying that we're finally here, that property is about to fall off a cliff, that we're going into another recession, and that it is different this time, that we've never experienced anything like it, and the world is falling on its head. My thought process after buying more than $400 million worth of property in New South Wales and Queensland is oftentimes when prices do come down, represent some of the better buying opportunities if you're taking a 10 to 50 year approach to investing. Now, obviously we can look at the last 50 years, but what's coming next is equally important. Now, according to Simon Presley over there at Propertyology, love your work, mate, interest rate cuts are the most likely thing at some point over the next couple of years, coupled with APRA reducing those crazy serviceability limits to make the access and ease of getting money much easier for home buyers and investors. According to Phil Anderson and Akil from Property Share Market Economics, and many of you will have a different opinion at the moment, and that's completely cool as well, we could be in for one of the largest stock market and real estate booms the world has ever seen. Now, if we look back at some of the fundamentals, according to the ABS, they expect 400,000 people to come into Australia in 2023 and another 300,000+ people to come in 2024. On top of that, you've got an influx of students, more than 500,000 of them arriving this year from all over the world, the same number expected next year. We've got the tourists coming back. We've got a completely undersupplied market without new stock coming on because it's been so hard for developers to bring on product, because it's been so bloody hard for the last 5 to 7 years in Australia for them to access money. We've got ridiculous and lavish government spending on infrastructure projects with the COVID bailout program and the Brisbane Olympic Games rolling in shortly. And we've still got record levels of savings in the majority of people's bank accounts. Now, one of the most important pieces of information that the media is not talking about at the moment that I heard recently from CBA is 1/3 of Australians own their homes completely outright. 1/3 of Australians rent. The other third of Australians that do have debt on their properties, the average person's debt to value ratio or loan to value ratio is sitting below 50%, meaning that the average person is in extremely good position to continue to make repayments on their home loan. Obviously, there's a whole bunch of people out there struggling at the moment, myself included. Like 6% interest rates absolutely suck. I'm paying more than $120,000 per year more this year than I was last year, which is creating all sorts of pressure financially on my own household. But as long as you can hold through these times, when we look back at the long-term history over 50 years, averaging 8.2%, I think we're in for an incredible future. The last thing I wanted to wrap up is the long-term vision for Australia. The Australian government is expecting the population to go to 60 million people within the next 50 years. On top of that, we've got all of the incredible stuff under the ground. We've got one of the most educated societies in the world, and through the ownership of real estate, one of the most affluent as well, on top of the people that want to study here, travel here, and obviously all those people that want to come live here. Now, for those of you interested in investing in real estate in the next 12 months, I'd love to offer you a one-on-one strategy session where we can talk about where you are today, where you'd like to be longer term, and we can educate you on the market, and then you can completely take that with a grain of salt and either go and absolutely smash it on your own or potentially become one of the extremely small number of clients we work with each month. Either way, you can book that session by going through www.pumpedonproperty.com or clicking the link below this video. Either way, I wish you absolutely all the best, and please start taking your longer term vision to your investment and your real estate journey.
Woo! That's a wrap.
That's a wrap.
Getting cool, bro. Yeah.
Oh, sweaty. So sweaty. Oh, that's good. Look at that. So nice, eh? Oh.